Hey, what's up guys? This is Ali here from Solid Trades. So I've been trading for over 4 years now and developed a very profitable strategy for me that has been making me money for the last 2 years or more, very consistently. And over the years, obviously, the more I trade, the more I perfect it and more I polish it. And I think that it has become very good now. And I would like to share this to you, and I think it's going to blow your mind. The best thing about it is very friendly. Very beginner friendly. So even if you're just started trading and understand just the basics of charting, candlestick chart patterns, you're going to understand this strategy. All right, so let's get into it. And what I call this simple dip buy strategy, I just find out the best areas where to buy the dips, and that gives the best risk to rewards. And I'm going to talk about this. So what you're going to learn in this video is learn how to find the best perfect dip buy areas, which is also called the demand zones, to get the best prices available. And learn also where to put the stop losses for proper risk management. Guys, this is the most important part, I believe, is risk management. If you want to be successful in this game, you have to understand risk management and understand where to put your stop losses. Okay, key things to look for and rules to follow and how to find this setup. So you know how, like, yeah, you understand the strategy, but what to look for, what should be your thought process to be able to find that setups beforehand so you can actually take advantage of it. So that's what I'm going to talk about, something very important. And then at the end of the day, I'm going to talk about the advantages of using this particular strategy. And I think that every beginner should start with this strategy. All right, so this is the chart of VXX, and I'm going to show you how you could have actually caught literally the bottom here, enter around this area, and catch this big move. Okay, and we actually caught it, and I even alerted in our chat. But a lot of people don't understand. I mean, let's say even if I alert, but if you don't understand the concept, you're not going to be comfortable or confident able to take this trade. So why would I alert it, and why this worked so well, and where to enter it? That's the main question. Okay, so basically what happened here is that, notice here, the first thing you need to do in order to find the perfect dip buy opportunity, which is this area, is find out where the stock price increased dramatically and a lot. Okay, so notice here, right here, the stock was coming down, right? The stock was coming down, and immediately right here on this candle, the stock immediately went up, right? All of a sudden. Now what this means is that this is the area where the stock broke out and then went. Now what happens is that a lot of people, when they see this, they start to buy and chase. They think, oh my god, it's going to go without me, and they buy and chase. That's not what you want to do. All you want to do is that look for that price to come back down to the same area. Now what you can do to make it easier is to draw a line straight up. So let's say if you draw a line, look what happened. If I simply draw a line, okay, you draw a support line right across this area where the stock broke out from, look what happened. The stock price came back down to the exact same area. 1, 2, 3, 4 times, and then had a massive push. Okay, so all you have to do is buy as close as possible to this support area. Okay, because this is the demand zone. Why is this a demand zone? Because that's where the stock price broke out, which means there were lots of buyers. That's why the price broke out, right? So when it comes back down, you don't chase, and you just buy, simply just buy the dip, and that's it. Now where would be the stop loss? The stop loss would be the next support. So notice, you see this area, the next support area, this will be the stop loss, so right below it, and that's it. So that would be your stop loss, and all you do is you buy close to this. Your stop is, if it comes back down, let's say if it does something like this, let's say if it, instead of bouncing, it comes down and down, then it starts to go down, so you get stopped out right here. That's it. So you take this much loss. Okay, so your loss is this much, and your reward is this much. So you see, that's how you have small losses and bigger profits. So when something works, even if you write even 30% of the time, which by the way, this strategy works like 70-80% of the time, but even if you write only 30% of the time, you'll still be profitable. That's it. You don't have to lose money. Like, you don't have to lose money, please. Okay, so now that you understand this, we're going to look at a couple more examples. By the way, guys, if you do like it, make sure you subscribe to the channel, because I will be uploading videos like these pretty much every week. So talking about this, now what are the advantages of this strategy? The first number is that you don't have to be the first person to get in, right? All you have to be doing is watching the stock, because notice here it took like 30 minutes. It stayed there for 30 minutes, right? Stayed there 30 minutes before it ripped, right? So you had so much time. All you had to do was just identify where the support level is and just put your limit order and then go. Put your stop, have a bracket order, and then just go. So basically all you do is you have your limit order buy and have a stop loss at the same time, and then leave. Just do whatever you want. You will come back with a profit, like money in your account, right? And this is great for, by the way, great for people who are working. So if you're working, this is an amazing strategy. Second is that you don't need to buy lots of shares, because you can cash this big move easily, right? If you just buy only a couple of hundred shares, you can make like $400 or $500 in a day. It's crazy. You have lots of time to get in and prepare your orders. So you see, you have so much time right here. You have so much time, so much time. When it breaks out, you're already prepared, because you already know when it's going to come, or whenever it comes down, you have your orders ready. That's it. And you have your limit already. Comes down, fills you up, and goes up. That's it. Okay. Now let's look at another example. This is Roadblocks. Now Roadblocks, another very famous stock. This was also alerted. It was also part of a watch list. So you have to have a watch list. By the way, I do put watch list every single day for free in my Discord channel. So feel free to check it out. I'll put the link down below. But here it is. So notice here is that first you need to do is find out where the stock price increased dramatically and a lot. So notice here the stock price was actually coming down, right? So it went up and it starts to come down right here. It starts to come down, and then boom, right here you see this pop. So watch it again. You see this area right here? That's where it popped. Okay, so what you do is you look for the price to come back down to the same area, and to make it simple, you just draw a support line right there, right where it broke out from, right? And look what happened right here. It came down, touched, boom. I had not drawn this level before. Look, this level was not drawn, right? All you have to do is find out where the stock price broke out. So this is the stock price where it broke off. It was because it was going down. It was going down, and boom, it also all of a sudden went up crazy, like very, very quick, right? Lots of green candles after the breakout. So what happened? The stock comes down and test this area where you draw a line, and look, all you do is you just put your or buy order right here, and you will literally, let's say the stock price is right here, moving right here. It hasn't even come. So let's say it moved up, right? So you notice, oh, you draw a line and you notice this is the price area, and it takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes. So for 11 minutes before, you're already prepared. So all you do is you put your order right here, and then put your stop right below, and that's it. Just go. You come back to a huge profit, imagine. And the next day it actually went even more. Okay, so what you do is you simply buy close to support, okay, because price comes back down one time, sometimes comes down one time, sometimes comes down multiple times, okay, and then it takes a huge rip, and this is a great dip buying opportunity. Okay, again, stop loss right here. Let's look one more here, mRNA, which is also a very hot stock these days, right? It happens on every single stock. Whenever the stock is in play, it's gonna happen. Same thing happened here. This is the area where the stock price broke out. Look how it went up crazy. Look what happened, comes back down. So before, when it went up here, you were already prepared. If it ever comes back down here, you're gonna buy the dip, and then boom, eventually goes up, right? And that's it, guys. So that's it, and I hope you guys learned something. This is the best for any beginner. This is the best best strategy in my opinion, because it gives you lots of time. You don't have to be the first person to get in. You don't have to be very, very quick. You don't have to use hotkeys, right? You are chill, take your time, put your stop, especially if you're busy. You just put your limit and stop, and then just go. That's it. All right, so hope you guys learned something, and if you guys learned something, make sure you subscribe, and I'll see you guys later. Take care. Bye.